Good morning, everybody in Accounting 110, the late start group. This is a busy week for us. I'm going to go over Chapter 6 right now, and that takes us up to the point of our exam on Saturday. And it's a lengthy exam since it's on 6 chapters, okay? And it's broken out into 2 parts to make it a little more divide and conquerable for you. So when I get done today with closing entries, we can say that we've gone through the entire accounting cycle before getting into more specific areas. I welcome anybody who wants to get in touch with me for any kind of a test review. You can text me, you know my number, 805-452-4883. I'm always glad to reply to a text as long as I'm not driving or something. And if any of you want to get together for a little additional test preparation, I'm here for you. Tonight is tutoring. I'm scheduled to tutor tonight at 5 o'clock. Of course, there'll be other students there from other courses, and we bounce back and forth. And I encourage that. Same thing tomorrow. I'm tutoring at 6 in the evening. So I guess we're just about ready to get going, and we have our first guest of the evening. Welcome to the Conan O'Brien Show, Anthony. How you doing?
Pretty good. You look a little different than Conan, but it's okay. I'll take it.
Yeah, right. Yes. Hey, I was just making a little bit of announcement about we're having our test on Saturday, and reminding people to show up for tutoring or contact me if they need anything, okay?
All right.
So with that in mind, I think we're ready to get started here. And we are in Chapter 6, which means we're going to close out our income statement. Here we go. Just having trouble finding. Big crowd. I got the no offense class. No offense class. I have the Yankee game on. Today's the first day of the baseball season, and I certainly can multitask here. As long as I find Chapter 6. Oh, I'm so sorry. Give me a moment here, guys. Chapter 6. I gotta go here. Oh, I know the easy way to get it. Hold on. You made any money selling cars the last few days, Anthony, or you?
I sold 2 yesterday.
Wow. Priuses?
Yes.
Prius.
It's the future, man.
Oh, absolutely. I mean, General Motors has already announced, I believe, no more internal combustion engines in like 30 years, right?
Yeah, 2030, 35, they don't want to do it. But the funny thing is it's going to take 40 plus years for an EV to actually pay back into the community.
Yeah.
They won't last that long. They won't last that long.
Yeah, we got to catch up to the technology.
We will see.
Okay. Rodrigo, how are you doing? Good to see you. I just talked a little bit about, we're going to go over Chapter 6 in a brief moment, Rodrigo.
Okay, that's the one I need help with.
Yeah, and we have our test on Saturday, right?
Well, I think we can start on the 2nd to log in and take it.
Okay, that's tomorrow, Friday then. Okay.
So then that gives us a few days to work on it. So
there you go.
I like your thinking, Rodrigo.
Yeah.
Because I'm gonna do it in a couple of days as well.
Yeah.
Well, no, it only gives you 90 minutes.
Oh,
but at least you could do part 1.
Okay.
I was gonna do it like Saturday, and then Sunday do part 2 after I know how they structure their tests. You know?
Yeah, that'll help too. The tests are coming right off the test bank, as far as I know. So,
so it'll
be similar to the homework?
Pardon me?
It'll be similar to how the homework's structured then?
Yeah, I would think so, yeah.
The homework or the quiz?
The quizzes and the homework a little bit. It'll mimic the quiz questions quite a bit. I'm not able to get a look at it before the test. If I could see it before, I could not give you answers. I don't mean that. but I can kind of teach to it a little bit.
Yeah.
But you should be okay. Can you all see the screen now?
Yes. Yeah.
PowerPoint? Okay, let me do my little bit
Oh.
for, let's get this thing. Come on. Get there now. And also, since I'm talking, hopefully I'm talking to more than just a few people here, the whole class, I'll catch up on all the gradings by the end of the weekend as well. But the class seems to be doing very darn good for the most part. Come on, come on, come on, there it is. Okay, can you, okay, let me do something here. Let me do it right over there.
Hey.
Okay. I just want to get rid of this if I can. The stuff to the left. Okay, well, maybe we're stuck with it, but that's okay. Okay, here we go, ladies and gentlemen. The
Hey,
closing process.
Bob,
Closing.
the bottom right-hand corner of your screen where you have your slideshow. There you go.
Now we got it. I had to just maximize it. Okay. All right. Let's talk about closing entries. Closing entries are super easy. What's difficult is understanding why we do them. Okay. Closing entries are the mechanisms for closing out or moving the profit into your capital account. Remember, we do the income statement first, and we have to do that first because once we get the net income, we can do the equity statement. The statement of equity is the beginning capital of the company plus that net income minus drawings, perhaps. The closing entries are going to take the income statement and we're going to close the drawings and move them into the capital account. When we get done, we will have nothing but zero balances for all income statement accounts, all sales and expenses, and the new month begins fresh. So let's see what we have here. They talk about the worksheet. That's that 10-column worksheet we went over in chapters 4 and 5, used to come up with the journal entries, the adjusting journal entries, and then we do the financial statements. And then after you prepared the financial statements, typically where I worked, you kind of went, oh man, we're done with the closing. That was tough. The only thing we have to do now are the closing journal entries. And that's the official end of the month-end closing cycles. So we're going to prepare the financial statements from the worksheet. Now, I guarantee this question will be on the test in some form. What is the sequence in which you do the statements? You have to do the income statement first because that feeds the income to the statement of equity. And then when we have the new equity balance, we move that to the balance sheet. And we're going to do that with these closing entries. We close what are called the temporary accounts, meaning your income statement, revenues, and expenses. All right. Income statement, they're giving us a heading here. They're going to talk a little bit about income statement forms. The heading, you put the company name, statement title, the period. And here's a question I think will pop up on the exam. Remember that the income statement and the equity statement, you have to say something like month of, you have to say for the month ended, something like that, to indicate that it covers the entire month. A balance sheet does not cover the entire month. A balance sheet is just a snapshot of your assets, liabilities, and equity today. Therefore, the balance sheet, you need to say something like as of a particular date, not the month of. Revenues are shown first, expenses are shown next. This is interesting here. I've never seen this before. I think last week in class I talked about it. Expenses are listed in either account number order or descending order by dollar amount. Believe me, nobody puts them in by dollar amounts. That would drive everybody nuts, because it would make the comparisons from month to month difficult. What's high this month might not be next month. And they talk about the single rulings. We're not worried about that. Let me just pump this up, see what we have here. Okay. And what they're just showing you here is the worksheet. Remember the income statement, everybody. You go to your worksheet and you find your revenue account. Everything above that revenue account, starting with drawing, is your balance sheet. Everything below drawing is your income statement. And what they're showing here is just how to bring it over to the income statement. And I think we're pretty good with that. So I'm going to go on. I know you're anxious to get to the closing entries, huh? Statement of equity. You start with the beginning, add your income, subtract the drawings to get to the ending. Bide your time. I like the mnemonics myself. They help me remember things. BIDE. When it comes to the equity statement, you got to bide your time. Beginning plus income less drawings equals ending. Okay. And here is a statement of equity. You have a beginning. I'm going to call that investment here, the 5,000. There's your beginning. I for income minus drawings equals the ending equity. The balance sheet, report forms, liabilities are shown below the assets. And we know this already. The balance sheet is going to have your total assets listed, and that must equal your liabilities and equity. You can put the assets on one side of the report, liabilities and equity on the other, or you can do them vertical. It doesn't really make any difference. Classified balance sheet, we talked about this. We're going to show current assets separated and current liabilities isolated. Current assets, boy, we're really covering some old stuff, aren't we? I hope I'm in the right chapter here, but it said chapter 6. Current assets are going to be chewed up in a year. The operating cycle. I'm not going to worry about the operating cycle other than to say it starts with cash. You buy things, you sell things, you collect money, and the month ends. Property, plant, and equipment. One true false question that they might throw on the test is regard to land. You do not depreciate land. You do not depreciate land. All other fixed assets are going to be depreciated. You should know what a current liability is. Any liability that's due within a year. That's the very definition of accounts payable. It could be notes payable. All accrual entries, all accrued expenses are current expenses. Taxes payable are current, and so forth. Long-term liability, obligations not expected to be paid within a year. Long-term debt, we can call it, and a mortgage. You buy a house and you take out a 30-year mortgage. That's clearly a long-term liability, but not for the first year. In other words, on your balance sheet, you're going to see mortgages payable dash current portion. And that's always going to be the current year that's due. And then on the long-term liabilities, you're going to see mortgage payable again, dash long-term. Mitch did not have any long-term liabilities. Balance sheet preparations. Assets are listed first. I think I'm going to go through this. You know this already. Relation to the worksheet. Let's take one more look at the worksheet. I think you gentlemen on the live camera with me are good with this, but not the entire class. So give me a second to zoom in. Zoom. Again, here is our worksheet. This is columns 9 and 10. We know that everything above the delivery fees is the balance sheet. So look what they're doing here. they're copying everything over to the balance sheet with one exception. And that's what the subject of this chapter is. The closing entries that bring the equity, over to the balance sheet. Equity statement, beginning could be the investment by the owner, additional investments. We will illustrate Ramon's shopping service. We finally got away from Mitch Williams and his pizza deliveries. Ramon's capital account had a beginning of 5, and then he threw another 3 into the business. So now the capital is up to $8,000. And hopefully you can see the general ledger there. And then at the end of the month, he had a profit of $1,500. He took $500 out for personal reasons. That may be how he pays himself. And we have the new balance. The closing entries are going to take this income and this drawing and move them into the balance sheet. Okay. That was a little bit of filler, huh? A little review. Closing entries. Here we go. Think in terms of 2 categories of accounts. We have an income statement. The income statement has temporary accounts. The income statement, those accounts are called temporary. And the reason is that at the end of each month, you have to zero out the revenues, zero out the expenses, and move them over to capital. These are the journal entries. These closing entries are going to take the temporary accounts and move them over. You're looking at the slide that says permanent accounts. That's the balance sheet. The balance sheet. Assets, liabilities, and capital accounts are not closed. We don't go to the end of the month and minus out our cash. It doesn't make any sense logically. But with the temporary accounts, which means the revenues, expenses, and drawing. Drawing is not an expense, remember, but we do have to close it. How do we do it? How do we do it? The closing process. It gives temporary accounts 0 balances so that they are prepared to accumulate new information for the next accounting period. When you look at the next month's financial statements, maybe a week into the new month, you might want to take a look at your income statement. How are we doing so far? Well, if you haven't zeroed out your revenues and expenses, it looks pretty sloppy. It's going to be a little hard to maneuver. So the closing entries clean up the presentation as well. Say hello to the new account we're going to introduce now in this chapter. It's called the income summary account. It's used to aid in the closing process, which has 4 basic steps. The income summary account is a clearing account. The only thing you're going to do with the income summary account is you're going to close the revenues and put them into the income clearing account. You're going to close the expenses and put them into the income clearing account. At that point, the balance of the income clearing account is obviously going to be your net income for that period. And then it's just a matter of getting rid of debiting, hopefully, debiting the income summary and crediting capital. Thus, we've zeroed everything out and we've updated the net worth of the business. They talk about 4 basic steps, and I think this is nicely laid out, okay? The 4 steps. Did I go too fast? I did, didn't I? 4 steps. First, step 1, close revenues, right? Revenues, your sales, your gains, sales, revenues have a normal credit balance, and we should know that by now, huh? Credit balance. So therefore, how do we zero out a sales account? Well, since it has a credit balance, we are going to debit each revenue account and credit income summary. It's that easy. You debit each revenue account and you credit income summary. Step 2, the expenses. Expenses have a normal debit balance. So we're going to credit them to zero them out. And now we're going to debit the income summary. So do you gentlemen see that we now have put the net income is now sitting in that income summary account? Well, that income summary account is just a clearing account. You are never going to see the income summary on your financial statements. It's invisible to the world. It's just a mechanism we use to bridge the closing process. So step 1, close revenues. Step 2, close expenses. Step 3, now that you have the net income sitting in the income summary account as the balance of that account, all you need to do is debit the income summary and credit owner's capital. Debit the income summary, credit owner's capital. You notice I said it says here debit or credit. I'm assuming we're making money. If we lose money, you would have the opposite sign control, okay? Sometimes a student will ask, what is the normal balance of the income summary account? You know, assets and expenses and drawings, they have a normal debit balance. Liabilities, revenues, and capital have a normal credit balance. What about income summary? And I kind of chuckle and I say, it depends if you're a half glass filled kind of guy or half glass empty kind of guy, because the accounts, the income summary is going to end up at zero at the end of the month. Hopefully you'll have a credit balance in that account at the end of the month, so you can bring that over successfully to the capital account. Step 4, we close drawing. Drawing gets closed directly to the owner's capital. Drawing, if you had $200 of drawing sitting there at the end of the month, you're going to credit drawing to zero it out, and you're going to debit capital, which of course will then reduce capital with the debit. That's exactly what a drawing does. It immediately reduces the net worth of your business. Closing process. And here they're giving us a Rodrigo, Anthony, please speak up if you can't read these things. I'm assuming that you can, okay? If not, please interrupt me.
No, it looks good. We can tell.
Okay, thank you, Rodrigo, I appreciate it. Okay, here we go. To close an account, remember, the only things we close are, we'll say drawing, but mostly what we're talking about is revenues and expenses, okay? So what was step number 1? Step number 1 said close the revenues. So here we go. We're going to debit this balance to get rid of it. We're debiting revenues and we're crediting income summary. So now the sales are here. We're going to go to every single one of our expenses, and one by one, we're going to credit them. When that's complete, now we're going to debit the income summary. So what's the balance in the income summary at that point in time? It's the net income. It's the net income. So now we want to take that income summary balance and zero it out. And hopefully we'll do it with a debit, because that would indicate we made money. We're going to debit this account right here. And that gives us a zero balance. And we're not going to see the income summary again for another month. And now we're going to debit income summary, and that income now gets credited to owner's capital. And then the only other closing entry we need to worry about is the drawing. This guy here, he had a balance. He took $500, say, out of the business. At the end of the month, we say, okay, boss, now we're going to reduce your capital by zeroing out the drawing and debiting capital. Income increases capital, drawing debits it. We should know what the normal balances are. The normal balance means the side of the T account, if you will, debit or credit that increases the balance. And that's another quick review. What do you think so far? You got any thoughts, Rodrigo? You following okay so far, you think?
Oh, yeah, when I did the homework on this part last week, it was a little confusing, but I had to literally go through this little chart one by one, follow the order to do the homework steps.
Good, good, yeah.
There was one section when you had to do these on each assignment, and at first I was so confused.
Yeah.
And then, if you follow the sequence 1, 2, 3, 4, it actually works out nicely.
Yeah,
but I was trying to do the homework without the chart, and I was completely confused.
Yeah, some students get a little overconfident, and they do it all in one journal entry. They'll do the journal entry for the revenues and expenses together on one. That's fine, but believe me, dividing and conquering is the way to go. Okay.
Okay.
You okay, Anthony, so far?
Yeah, it's honestly, for how I go about this is I trial and error.
Hey, that's how a lot of us go through life, right?
I've gotten this far, so
yeah. Like I said, doing the closing entries is not hard, as long as you know that what the credit balances mean. That revenue has a credit balance, so we debit it to zero it out.
So, like I was saying to you on Tuesday, whatever you do to the left, you do to the right. Except in this case, it would be either vice versa, depending on the accounts.
Exactly right.
Whether it's an expense or a revenue account.
Yeah, you say what you do on the left, you do on the right. That's exactly right. You're really saying you have to have a debit and a credit. Yeah.
It's just how I work. I understand it's a debit and credit. I probably should be using that language a little bit more better, but
that's fine. That's fine if that helps you learn it that way. I remember the nuns in algebra class back in high school. Whatever you do on the left, you have to do on the right. It's kind of like life, huh? Okay. So now we're done. What's that?
If only.
Yeah. Okay. We're done with the closing process. So let's see if they'll show us some entries, huh? Well, they're starting us off with the general ledger. Let's not look at the net loss side. Okay, we're glass half filled people. So this company had income of, they don't give us numbers here, but here's the income summary. It started off at zero. We debited the revenues and we credited income summary. We credited all the expenses and debited income summary. So the profit for the month was $1,000. We then debit $1,000 to get rid of that $1,000 balance. And that ends up going right over to capital, okay? I don't even want to deal with a loss. We're not going to worry about losses. And now here, let me pop this up for us. Let's take a look here. What do we close? We close the revenues and expenses. So you see here, guys, the rest of the class, you have to start with the revenues. The revenues were $8,000. That came right off your income statement. We debit it, and now we have no more income. No more income. Now we're going to take that income and credit the income summary. You could have multiple revenue accounts. You might even have things like gain on the sale of a fixed asset or interest income or something like that. And that would have to be closed as well. By the way, ladies and gentlemen, the first run of the baseball season has just been scored. The Yankees just went ahead of the Toronto Blue Jays. The other way around, Toronto just scored. Sorry for that distraction. Okay. Now look at your expenses. Look at those expenses. Look at those expenses. I'm sorry. I hit the button again. Every single expense gets credited. it gets credited. Look at the balances. They're all zero. All these balances are zero. And now they are going to be moved up into your income summary account. And let me just see something here. Oh, there we go. Now it's rolling for me. Debit revenues, credit all your expenses. And then the drawing, if you notice, the fourth and final step, you credit it to zero it out, and then you debit your capital up here. So this guy had, it looks like, zero to begin with in capital. His company made a profit of, what was it? I can't tell from here, $1,000 or whatever. And that got moved over to capital. All your expenses. All the expenses. Let's look at the journal entry. I'm going to make it bigger. If I have trouble seeing, I'm going to assume somebody else might as well. Okay. Let's look at the journal entry. We don't need to read that right now. Okay, here we go. We only had one revenue count, gentlemen. We debit it, and now that's closed, and we credit income summary. The next journal entry, get in the habit on the expenses to start with your income summary, because you want the debit to come first in this case here. You know you're crediting all the expenses, so therefore you know your debit's going to be income summary. Just, makes it look better. So here we go. We're zeroing out wages and rent and supplies and everything. So now we have 8,000 in revenues that we closed, 3,360 in expenses we just closed. That leaves us with a profit of $4,640, 8,000 minus the 3,360. And all we have to do now for revenues and expenses is to move that profit into capital. We're going to credit Mitch Williams capital and debiting income summary. In so doing, we zeroed out the income summary account as well. And that account has to be zero at all times. At all times. You're never going to see it on your financial statement. It just exists for one purpose only, to bridge the closing statement. Not the closing statement, but the closing entries. And then finally, capital and drawing. You don't go through income summary for drawing. I guess you could, and it would work out the same. But drawing and capital have nothing to do with revenues and expenses. Therefore, you can close the drawing directly to capital. Key thing is understand why we're making these entries. We're making them in order to update the capital to its new balance. Now, we just did all of the closing entries. We're pretty much done for the month, except one more thing. You guys work for me, and I say, Anthony, where's the post-closing trial balance? And you go, geez, I forgot to print it. Let me do that. The post-closing trial balance, it's prepared after the closing entries. Get it? Post-closing. And all it does, once again, is prove the debits equals credits. But what you're going to understand now, hopefully, is you will only have the permanent accounts on that trial balance, because we zeroed out the revenues and expenses. We zeroed out the temporary accounts. The temporary accounts, okay? And let's take, I'm pretty sure you guys can read this. Post-closing trial balance. Well, where did we get these numbers? We got every one of these numbers from the worksheet, from the balance sheet. All we did was copy every one of these numbers over here with one exception. And that's the new capital balance of 6640. That's the new capital balance of 6640. And now we're done. Okay. Post-closing trial balance is just going to be balance sheet accounts. Let's see what they're talking about here. List and describe the steps in the accounting cycle. I get the feeling that when this bunch of slides was put together, the person who was working on it realized that if they just talked about the closing entries, it would be very short. So to me, they've thrown in some of this review filler type thing, okay? During the accounting process, the month begins, and what are you doing? You're getting paperwork across your desk, you're getting emails, you're getting texts. You might even be getting voicemails that authorize you to do something. You're looking at invoices and cash register receipts and purchase orders and credit memos and all kinds of things. You're looking at time clocks for the wages, all kinds of source documents. And then you're saying to yourself, what are you doing with this stuff? Well, we got to do this journal entry and this. You do that all month. And at the end of the month, you're going to go to step 4. Step 4, prepare the trial balance. The next 2 columns are the adjustments. Columns 5 and 6 will be the complete adjusted trial balance. And then you can prepare the income statement after you've posted those adjusting entries. Statement of cash flows. We're not going to go into this really. We're not going to do this appendix. The only thing I'd like you to know about cash flows is what we learned earlier, in that there are 3 types of cash flows: operating, investing, financing. When you go to get into 230, hopefully I'll see you in my 230 class, or whoever is your teacher. You're going to find out that there's a whole chapter just on the cash flow statement. So for our course at this level here, let's understand operating, investing, financing. Operating cash flows are the cash flows, meaning cash that went up, transactions that went down. At the end of the month, when we're looking at our business, we hope to see positive operating activity, positive cash flows. Operating, it's related to what the business is there to do. It's the core operation. My favorite company and my biggest investment, Coca-Cola. Coca-Cola bottles, ships, and sells soda and other products. Any expense involved in making the soda, selling the soda, paying its bills, those are the core operations. You want to see positive cash flow from the core operations, known as operating activities. Now, no matter how successful a company is or unsuccessful, they're very likely to have 2 other types of cash flows that have nothing to do with running the core operation. Coca-Cola may have some investing, and I know they do. Investments. What we're talking about here are basically 2 things. You buy a big piece of equipment that's going to last you for 10, 20, 30 years. That's an investing cash flow. That would be an outflow of cash, negative. The other investing is you're Coca-Cola and you're sitting on a big pile of cash and you decide to buy 1 million shares of Apple. That would be an investing cash flow, okay? And then when you sell the equipment, when you sell that investment, then it's a cash inflow. Financing activities, borrowing, raising money, that's all we're talking about, financing. We're borrowing money, transactions dealing involving exchange of cash between business and its owners and creditors. Financing is a fancy way of saying we're borrowing money. Maybe we issued stock to the public and raised money. That would be another example where we issued a bond to raise money. And when you're repaying these debts from financing, that's not operating. So I think we are done with this chapter. It was not a long chapter by any means once we got through some of that filler. What do you think? Let's see, Rodrigo, any questions, any thoughts?
No, there's just a lot of little things to remember.
Yeah, I don't think it's too onerous.
Nothing
It's
hard,
not-
but just memorization for the test.
yeah,
Sequence.
yeah, just
It's a
you know,
sequence of steps. I have to just memorize.
yeah. As long as you remember why we're doing these transactions, we're zeroing out the income statement. Therefore, we debit the revenues and the opposite goes to income summary. And be very clear in your mind, and I think it is now, when you get to that balance in the income summary, that has to equal the profit. That's the whole point, putting the profit into the capital account, okay? Anthony, you got anything for us here?
No,
Okay, not too tough, huh?
it's all right. Other stuff is, it is what it is. We'll see how much I've retained after this weekend.
Yeah. Like I say, you guys have a tough test because you're doing this whole entire course in, I think it's less than half the time of my other 110 class. So you've got that time pressure. You've got lengthier tests. But if you get through it doing this way, it'll be really good for you. Believe me. And
It seems a good pace, though. It doesn't seem overrushed.
I'm glad to hear that.
I haven't taken the semester ones in a long time, but this pace seems doable. I do a little bit every night, and I've been keeping up.
I think that's exactly the only way to do it. You just consistently devote whatever time you need, maybe on a particular day, to make sure you've caught up on the homework. And look at these videos if you think they might help. And again, I'm always available. We got tutoring tonight, tutoring tomorrow night, and I'm always ready for an ad hoc if anybody wants to get together. Okay.
Okay.
Sounds good.
Are you a baseball guy, Rodrigo? No.
No, I wasn't really allowed to watch sports as a kid, so I never really got into any sports.
Oh, really? Oh, you had to do you had to do something useful with your time, huh?
Well, my dad said if you're bored watching something on TV, then you got to clean the house, go do dishes. Otherwise, go outside and do something. So I lived as a kid in Isla Vista, so I spent every day at the beach or riding around UCSB. And that was my time,
I tell you what, if I grew up in Isla Vista, I'd probably not be watching much television either.
No, and then they had an arcade there at the time. I don't know if they do anymore. And then they had pool tables. So I would literally go play pool every afternoon with my dad.
Oh, really? Pretty good pool player, are you?
I was when I was a kid. So I would literally get a $5 allowance for the week. I would go hustle the college students because you see a little kid, hey, I'll play you for $1. Lose. Okay, I'll pay you for 20. Win. So then at the end of the week, I'd have $100.
My goodness, Rodrigo, you're a businessman from a young age. I played a ton of pool too. In high school. There was a guy from our hometown. He became one of the greatest pool players in world history. I don't know if you ever heard of Steve Miserak. Does that name ring a bell?
No. I'll look him up.
Google it. Steve Miserak from Perth Amboy. His father was a great pool player, professional, and he also played minor league baseball. And I'd get out of school in high school in Perth Amboy, New Jersey, and the first thing we did was go over to the pool hall. And one night they had a competition where Miserak Jr., Steve, played this other guy from New Jersey. Straight pool to 150. I think you know where I'm going with the story. Yeah. The other guy broke the balls up, in straight pool, and Miserak ran 150. And that was that was the end of the game,
Yeah.
Anyway, Steve Miserak, Mizerak. He was also famous for the beer commercials he did for many years. But anyway, okay, class. I know. I digress here. All right, we're ready to pack it in then, guys?
Yeah. Maybe I'll come see you at tutoring.
That sounds great. See you later too, maybe, Anthony, huh?
Yes, sir. I'll pray
okay,
tomorrow.
You take care. Good night, everybody. Bye-bye.
Bye. Thank you.
Oops.